afternoon, everybody. Thank you so much for joining us here. So today we are going to be discussing building your pay into your small business finances, brought to you by myself, the owner of Sheffield Accounting and Financial Services. All right, so Lisa gave you a quick bio of me, but I just wanted to go over some things that were not mentioned in my bio. So I specialize in bringing order to chaos. A lot of the times, clients come to me with a little to no financial acumen or business financial acumen. So things are all over the place. I have seen just about everything in terms of small businesses and accounting. So my job is to bring order to the chaos within your business. A lot of my clients also consider me the hand holder of accountants. Not only do I help guide you, but I am also your thinking partner. I'm not the accountant that's going to say, you have to do it this way, you have to do it that way. I like to combine our thoughts and guide you in a way that's going to help you reach whatever goal you may have. And not only do I guide you, I teach clients along the way. I think the most common mistake that business owners make is just relying solely on the accountant to do their job, not knowing what is actually going on with the numbers. So I explain everything I'm doing to my clients. And I'm also a firm believer that small businesses should operate as if they're a large corporation. When you look at the statistics, the success rate, for the small businesses, a lot of times small business owners don't make it to 2 years or 5 years or 10 years, but larger corporations tend to have a longer a longer run than staying open in business. So I think if more small businesses operate the way that large corporations do, your success rates will be through the roof. All right, so before we begin, I want to test your knowledge on this topic. So I'll be going over a list of questions, and if you can, just write or type in what you think the correct answer is in the chat box. All right, so the first question, what is the proper way to pay yourself as a sole proprietorship? A, salary, B, owner's draw, C, hourly rate wage, or D, dividends? That gives you a couple of minutes to respond, or a couple of seconds.
Seeing a lot of A's and B's, a few C's in there.
Okay. All right. And my computer just froze up. Can you hear me okay?
Yeah, we can hear you.
Okay. Let me go out and go back in. All right, while I wait on my computer to load, the actual correct answer is B, owner's draw. I'm not sure, let me try that again. Okay. Next question, what is the proper way to pay yourself as an LLC, taxed as a sole proprietorship? A, salary, B, owner's draw, C, reinvest all profits back into the business, or D, dividends?
Getting a lot of A's and B's. So a lot of people are saying salary or owner's draw.
Gotcha. All right. The answer is B, owner's draw. All right, next question. What is the key determining factor to consider how much to pay yourself from your business? A, the amount of taxes you want to avoid. B, your personal expenses only. C, the size of your team. And D, the amount of cash flow in the business.
It's like all D this time.
All D, okay.
Everybody's saying D.
D is correct. Next one. If your small business is a corporation, how are you typically paid? A, owner's draw, B, salary, C, dividends only, or D, hourly wages.
So a lot of B and C we're seeing here for this one.
Okay. B is the correct answer. All right. And how should you determine the amount to pay yourself from your business? A, based on your personal expenses. B, based on a percentage of your profits after covering your business expenses. C, based on the salaries of your counterparts. Or D, based on an arbitrary number that feels comfortable. Or E, I'm sorry, A or B. A and B.
So we got one person said all of the above. But yeah, a lot of A, B, and E posting in the
Okay.
chat.
Okay. E is the correct answer. All right, and then I'm trying to move this bar from the top of my screen so I can see the question. Why might you choose to leave some of your earnings in the business rather than taking it all as your personal income? A, to avoid paying taxes. B, to decrease business expenses. C, to reinvest in the business. Or D, to avoid paying yourself.
We're getting mostly C's, got a few B's.
Okay. All right, so the answer is C, to reinvest in the business. Why is it important to pay yourself regularly from your business? A, to reduce your business's tax obligation. B, to avoid IRS audits. C, to maintain compliance with respect to your business structure. And D, to prevent employees from requesting higher wages.
Again, got a lot of C's this time.
Gotcha, perfect. That's what I want to hear. All right, what is the reasonable strategy for adjusting your pay? Only take increases during profitable years. Always keep your pay the same. Adjust your pay proportionately with business growth slash decline, or increase your pay each year.
And a lot of C's, a few B's.
Okay. C is the answer to that. So if you got all 8 of those questions, that's great. We may go over some aspects that you may be unaware of, but stick around. You know, I may spark some questions that you may have, and you can ask them at the end of the presentation. If you did not get them all right, you're in the right place. Take notes and ask your questions. All right, so the next section we're going to be going over is different business structures and how they have an impact on your compensation. The first is the sole proprietor. Um, this is basically when someone is running a business, but they are not running it out of a business name. You may get a 1099 with your name on it and your social security number instead of a legal business name and the EIN number. You frequently see this with independent contractors, freelancers, writers, artists, Uber drivers, DoorDash drivers, all of the above. The majority of those individuals are sole proprietors. And so under this type of business structure, you cannot pay yourself a salary. you must take an owner's draw, and we'll go over what an owner's draw is shortly. All right, next one is an LLC. LLCs are, or they should be registered with your state and with the IRS along with the EIN number. With an LLC, you are legally separated from your business in case of a lawsuit, God forbid. If you're sued, only your business assets will be included in that lawsuit. And if you're sued on a personal level, your business assets won't be at risk. So it's important to have that separation between your business assets and your personal assets. I strongly suggest all those who operate in the business to at least have an LLC, and you can gradually move up or change structures as needed. And same with the sole proprietorship. Owners are not employees, therefore they should not be paying themselves a salary or hourly wage or any of the above. It should be strictly owner's draw. All right, and with the partnership, this typically consists of two or more owners, and same with an LLC. It should be legally registered with the state and with the IRS along with the EIN number. And with the partnership, I often see this, they believe they should receive a wage. However, they're technically not a corporation, meaning an S Corp or a C Corp. Therefore, they should be paying themselves through distributions and or owner's draws. S corporation, this is a more trendy structure as of recent. And I'll go over the details of this later, but I don't recommend you start out as an S Corp. I always tell anyone or any of my clients, once you get to the 50K mark in profit, then you should explore the S corporation setup. If you're making less than 50K profit, the LLC is more than likely the best fit for you, or a partnership if you have a partner. So yeah, the S corporation is a legal entity set up with the state, IRS, and with the EIN number. So under this structure, owners should pay themselves through distributions, salaries, or a combination of both of those things. And with this, with them being on a wage or a salary, this is when you will begin to see payroll taxes being deducted from your paycheck. So you'll basically be an employee of your business. And it is very important to pay yourself a reasonable compensation. And this means that, for example, if your business makes 100K in revenue, it's not a good idea to pay yourself 90K for your pay, for example. All right, and the next structure is a C corporation, which is more formal than the LLCs. You'll have shareholders, directors, officers. You see those terms used instead of owner. And with that, both the business and the owners are taxed on a federal level. So not only will your business be taxed on this income, but you'll also, as the individual owner, be taxed as well. So this is where you'll hear the term double taxation. And through the C corporation, owners should pay themselves through dividends, salaries, and a combination of both. All right, so methods for paying yourself. I use the word salary a lot during that during that last section. So the salary is basically a set amount paid on a regular basis. You as the owner can determine what the regular basis is for you. So that could be weekly, bi-weekly, monthly, semi-monthly, the first and the 15th and the 30th, whatever you decide, just make sure that it is consistent. And like I mentioned on the previous slide, with you being on salary, payroll taxes will be deducted or should be deducted from your wages. And it is your responsibility to remit those payroll taxes to the respected agency. So the IRS, um, your state and your local entities. And if you're paying yourself a salary, I highly suggest utilizing a payroll software. It just makes the process a breeze. You don't have to manually calculate how much payroll taxes should be taken out, how much you need to remit to the respected agencies. It just makes everything a breeze. And if you pay yourself the same amount each pay period, you can set up auto pay to where you don't even have to hit a button to run payroll. It runs automatically on whatever schedule you select. So with the salary, S Corps and C Corps are the only structures that should have a salary taken out of the owner's check. Owner's draw. Ideally, this would be a fixed payment on a regular basis. With a sole proprietorship and an LLC or a partnership, you can technically pay yourself whenever you want, however you want. But I'm an accountant. I have an accountant's brain. If you pay yourself on a consistent basis, your books just look so much cleaner. So I recommend you paying yourself on a fixed basis or a regular basis. So with the owner's draw, different from a salary because no payroll taxes are being deducted from your pay. And with this owner's draw, you can technically set up a bank transfer. Most banks will allow you to set up a scheduled payment. If not, you can write yourself a check. All of that works. You can use a payroll software, but since you aren't deducting any payroll taxes, I would say you could get away with doing a regular bank transfer and saving yourself some money on paying for payroll software that you may not even need. But if you feel like you need the software, I say go for it. And the business structures, like I mentioned earlier, will be sole proprietors, LLCs, and partnerships. Distributions, these are basically periodic payments to a partner or owner. Um, if you have a partner, the distributions would vary depending on a partnership agreement and a profit for a given period of time. So it could be a monthly distribution. Quarterly is actually the most common way. And or you could do a yearly amount. So distributions apply to partnerships and S corps. The next one is dividends. Now dividends only apply to C corps. And this is basically a percentage of the company's profits paid to the shareholders, and it could fluctuate depending on the business performance, and is typically paid in cash or through stock. Bonuses are another option. I often do this method with my clients who are S Corp owners. Since profit may fluctuate depending on the industry, if I find that a client has a higher profit in one quarter, instead of adjusting their regular pay, I'll just issue a bonus for a quarter or an end of the year bonus, depending on the business industry. All right, so tax implications are very, very important to understand, or at least the basics, have the basics down. So with owner's draws, all business profit is looked at as the owner's income. So if you are a sole proprietor or an LLC, if you have a profit of 50K at the end of the tax period or year, then you are taxed on that entire 50K. So even if you pay yourself for owner's draw out of your business bank account, or if you don't do it, or if you don't pay yourself through an owner's draw, your profit is going to be taxed either way. So that's important to know. With the owner's draw, a lot of individuals think that if they pay themselves via owner's draw, then they aren't taxed on a profit, or they're only taxed on what's left. That isn't the case. So it's important to know whatever you have left over at the end of the year, profit-wise, is what you'll be taxed on. All right, and then with the owner draws, you're subject to income tax, self-employment tax on all the business profit. All right, the next section here is salary. Salaries are subject to payroll taxes, and like I mentioned earlier, must be remitted to the IRS, state, and local agencies. And if you have payroll software, your payroll software should take care of all of this for you. And with the salary, you're subject to income taxes. Your with you being taxed as an S Corp or a C Corp, you'll only be subject to income taxes. The self-employment taxes are completely gone at this point, so you'll be saving 15.3% right off the bat just by making that switch. All right, the next section is dividends and distributions. Um, Dividends and distributions are subject to income taxes. So if you are an S Corp and you pay yourself through wages and dividends, you will be taxed on both. So if you are an S Corp, it's important to get with your accountant or find an accountant that can help you through this process because it can be a little tricky. Determining how much to pay yourself. This is a process that I find works best for my clients. If you're working with an accountant, or you may have another process that you prefer, but this is what I find to work best in order to figure out how much you need to pay yourself. I like to start with a personal expense audit, and this is basically going down your list of personal expenses, getting a monthly total, and this total will let you know the minimum amount you need to pay yourself, specifically if you don't have any other additional income coming in. If your business is your sole source of income, then if your personal expenses are, let's say, $2,000 a month, then that's the minimum amount that you should pay yourself. And I like to tell clients also, look at your last 3 bank statements because I know not all expenses are monthly. You may have some quarterly expenses in there. So if you gather the last 3 months, you should see just about everything that you spend on personal wise and just tally up those items. And it's important too, if you see any, it's important to save money. I'm an accountant once again. I like to save money. I like to watch what's going on. This could be a time for you to eliminate all those unnecessary subscriptions. If you have cable, if you have Netflix, if you have all these streaming services that you may not even utilize, cut some of them down. And this process will help you do that. Also conducting step 2 would be a personal income audit. And this is determining how much your personal income is outside of your business. So it could be your W-2 income from your job, your rental income, Social Security, SSI, spousal income, all of the above. Just make sure you factor that in. If your personal income is less than your personal expenses, then use your business profit to fill in this deficit. So if there's a $500 deficit that you notice you have more expenses than income, then utilize your business income. Pay yourself that minimum amount if you can. All right. And I just want to know also, excuse me, I'm sorry. Let me get some water. I was at a sporting event this past Sunday and I am like struggling to talk. Voice is drying out. Okay. If your personal income is more than your personal expenses, then I suggest reinvesting your pay back into your business. A common concept or a popular concept that I'm seeing now is that business owners feel the need to pay themselves first. I mean, you can do that, but I find it more beneficial if you reinvest that money back into your business if you can afford it. I know everyone's financial situation is different. So this is one of those times where it varies situation by situation or case by case. I do not like to take the cookie cutter approach to business finances because what works for one person may not work for another individual. So if you find that you can hold off from paying yourself, reinvest the money back into the business. You can grow your business exponentially by going that route. But if you can't do that, I completely understand. All right, step three, assess your business income and expenses. This step will allow you to determine how much your business can afford to pay you. This step is very, very eye-opening. I've seen it time and time again because you may discover that you cannot afford to pay yourself from your business. If this is the case for you, I suggest you move forward with doing price changes or price adjustments, increasing your pricing. That's key. Or if you're comfortable with your pricing, you may want to decrease your expenses. If you do an expense audit of your business, just see where you could cut costs. I guarantee you're able to find something that can be cut and you'll save money that way. And just getting with your accountant or finding an accountant to help you find other ways to increase your cash flow. Step four, determining your pay and frequency. So once you determine your pay based on steps 1 through 3, you want to then determine your pay frequency. Like I mentioned earlier, it is important to have a consistent pay schedule. Even if you pay yourself weekly, make sure it's on the same day each week or the same days each month. Just have that consistent schedule. More specifically, if you are on a salary, this is very important to pay yourself consistently on a regular basis. Now, if you are a sole proprietor or an LLC, there are technically nothing with no laws with the IRS or anything that says that you have to pay yourself on a consistent basis, but it just makes your books look so much more cleaner. And then you're able to plan properly in terms of how much you want to pay yourself and compare it to your business expenses. It just makes things easier, trust me. All right. Questions?
Yes, so we have quite a few
Okay, good.
questions. Um, all right. So we have one anonymous poster as, let me see, corporation from a personal income standpoint. Can you pay yourself less than your payment agreement, i.e. contract says 50,000, you actually pay yourself less for whatever reason?
It's important to note in that agreement that the pay may fluctuate, but if you have a set amount in that agreement, I would say definitely stick to that amount.
There you go. Then another anonymous poster asks, if no payroll taxes are coming out of an owner's draw, how is that payment reflected in your annual taxes? Is it a business expense?
It is not a business expense. So, and I'll go back to the example I gave earlier. If your business income or your business profit is 50K, and let's say out of that 50K in profit, you paid yourself 25K, the IRS will still tax you on that 50K. So it's not an owner's expense. You will be taxed the regular income tax rate on that. So whatever your income bracket is what you'll be taxed.
Gotcha. All right. And then Stacy Moss asked, if I am an LLC with my spouse, or if I'm in an LLC with my spouse, when I take an owner's draw, do we need to list it as 5149 to each other? Or can you determine how much that owner's draw is arbitrarily?
Yeah, so if you have a 50 51-49 split with their spouse, definitely stick to that agreement. And what was the first part? I'm sorry, can you repeat that?
And she asks, when they take a owner's draw, do they need to have that owner's draw? So let's say the total owner's draw is $50,000. Let's just use that number. Do
Mhm.
they split that 51-49, or I believe that's
Okay,
the question she's asking.
I got you. I got you. Okay, so in that case, it depends on which owner took out the draw. I have quite a few clients who are partnerships, and whenever I see a cash deposit, not a cash deposit, a bank transfer to whichever partner's account, that's how I track who took out their owner's draw. So it doesn't necessarily have to be 50K or a lump sum taken out and then we split that based on your partnership agreement is based on whoever takes out the distribution
Perfect.
or the owner's draw, excuse me.
All right, and then we have Carrie Cochran asked, what is a good percent to pay yourself as a stockholder? And can you talk about expense accounts or allowances?
Yeah, so this is actually one of those questions that are case by case. So the answer could vary depending on your specific um, business situation. So if you want to contact me afterwards, we could definitely discuss it more. I would have to get more background to answer that.
All right, and then we have another question from an anonymous poster. How would you show proof of income with owner's draws?
So, and this is tricky. It depends on whom you bank with. I've had clients who pay themselves from their LLC or sole proprietorship, and the bank is requesting, I guess, a W-2 or some type of official financial statement, which they don't have because they're an LLC. So what they end up doing is submitting their tax return, and that tax return, if they have a Schedule C, acts as the proof of income. So like I mentioned earlier, whatever your profit is for that ending period, whether you pull the profit and loss for the year, quarterly or monthly, whatever that profit is will be the owner's income. So it all depends on your bank. They may ask for a tax return, they may ask for a profit and loss, or they may just look at your personal bank statement and determine whatever your owner's draw is your pay.
Gotcha.
Mhm.
All right. Ooh, the questions are rolling in. I'm gonna try to keep up. Okay,
Okay.
so Nidra Edwards. Now, do you have more presentation left, or
Oh no,
is that it?
no,
Okay, all right.
just
I just want to make sure.
my contact
Okay.
information.
All right. So Nidra Edwards, excuse me, asked, could you choose not to do an owner's draw the first couple of years of starting your business? I currently have a FT job and our full-time job and plan to retire in 2 years to focus on my business. And that's when I would like to start taking a small draw.
Yeah, so if you are a sole proprietor or an LLC, you can definitely opt to not pay yourself from your business and just keep reinvesting your profit back into the business. There's nothing wrong with that. Now, if you're an S corp, then you would have to, reconsider some things. But to answer your question, if you're a sole proprietor or LLC, nothing wrong with that.
Nothing wrong with that. And I'm gonna clear out this Q&A queue really quick, just so I can keep track of which ones we've answered and which ones we haven't. All right, so, and then we did Nidra. All right, Camille Dickerson asked, in an LLC, why am I not an employee? Question mark, question mark.
Because with the type of structure that is, you will not, you're the owner, you're considered the owner. So if you were to convert to an S corp, there are laws and stipulations from the IRS that states that, okay, you're not the owner, you are now an employee. No, not just the owner, you are now an employee. So with the LLC, you're strictly looked at as an owner, and all the profit that you have coming in is your income as the owner, if that makes sense. But we can definitely dive deeper into that if you want to contact me later. Who was it, Carrie, you said?
It was Camille Dickerson.
Camille. Okay,
Yeah,
okay.
yeah. And to that same point in your expertise, Laurkita, excuse me, would
Hmm.
you say that a lot of what goes, or a portion of what goes into determining the business type that you go with is about how you want to be taxed by the government?
I would say income number one, or your profit number one, and then how you want to be taxed. If you reach a certain profit, and like I said, between 50 and 60K, then your taxes may be ridiculously high with an LLC. Now, if you convert or switch to an S corp, then you'll see that you'll have less taxes, and then you have more benefits as far as like they call them fringe benefits. You're able to write off more with the S corp, and then you're saving on taxes.
Gotcha, perfect. All right, and then we have a question from okay. I have a question from Williams Julius. His name might be backwards. I am based in Asia. Could these topics be implemented in Asia? When you say 50K, do you mean 50K per month or 50? I might have mixed up two questions. Sorry, that's two different questions. So he's in
Okay.
Asia. Do these things apply in Asia? Is his question.
Okay. They may or may not. I'm not really sure what the tax implications are in Asia. So I would suggest if you have a government website, go to that website and see what the tax obligations and implications are.
Lord. Okay, and then we have a question from Stacy Moss. Oh, a follow-up question, or some more context. So she said the owner's draw that she was talking about between her and her husband, 5149, is
Mhm.
deposited into a joint account for the owners. So does that adjust your answer to her question at all? Would it just one sum going into a single account?
So it'll go on one account. So technically, you don't need to separate the two owners distributions or owners draws. There's no need to separate if it's going to the same account if they're both spouses. Now, if they're going to two separate accounts, going to two separate partners, then yeah, we would do what I said discuss. I mean, what I discussed earlier. But yeah, the way you're doing it now, you don't need to separate the two into a split.
Perfect. And then okay, and then this anonymous poster asked, when you say 50K, do you mean 50K per year or 50K per month? I think they're referring to that example
Yes.
quality that we've been using.
Yes, yes. So with the if you're referring to the S corp, 50K a year in profit. And I just want to be clear, a lot of individuals confuse the profit with the revenue. So when I say 50K profit, I mean your revenue minus your expenses.
Mhm. And then would that be looking at gross or net profit?
That would be
50K per
net.
year. Okay, so looking at the net profit, 50K per
Mm-hmm.
year for net profit. And I'm going to ask you a question while I try to clear up this queue here really quick.
Mm-hmm.
I got like 12 questions in here. Um, you talked about the ways that you can pay yourself as a business within the different structures, business structures.
Mm-hmm.
What are some of the dangers of paying yourself incorrectly within those business structures, just generally speaking?
Yeah, yeah. So I recently had an issue with a new client who was an LLC, but he was taking out payroll or salaries for himself and paying payroll taxes. In a case like that, the IRS will look at it as if you're underreporting income because if you're paying yourself a salary, that's being counted as a business expense. But if you're an LLC, it shouldn't be a business expense. So that caused a lot of red flags. And it took us about 2 months to get that cleared up with the IRS. We had to amend his taxes, we had to amend payroll tax reports. It just was a really big headache. It was an easy fix, but it was a long fix. So yeah, that is one of the most common things that I've seen, especially with the LLC.
And now when he amended his taxes, did he get like a return on those? Sound like an
He
overpayment?
he ended up owing more money.
Wow.
Yeah, because his income was understated.
Mm,
Mhm.
gotcha. And then just briefly, if you can share, he owed more money to the IRS. How much did it
Mhm.
cost him to get that fixed with your service?
You know, I cater to a small business owner, so
Hmm.
I try not to nickel or dime anybody, and I don't
Right.
charge an arm and a leg or anything like that. So I basically charged him the standard, well, my standard tax prep fee, which is $300 since he was a small business owner
Hmm.
and he had like a small little side gig. So $300 with me, and then with the IRS, of course, there were penalties and things added. So.
Perfect. All
Mhm.
right. So I think I bought myself enough time. So, all right, so we'll go on some more of these questions. So Anonymous asked a follow-up. If in an LLC and your payment to yourself is not a tax benefit, would you change your business type based on the amount of profit you generate?
I would change it based on the amount of profit you generate once you get to that golden number 50K. Before that 50K, you may not even see much of a tax benefit from switching from an LLC to a test S corp. You'll just end up paying more money and payroll taxes that you don't necessarily even have in your business to pay. And then you're paying someone to convert your business from an LLC to a S corp. So it end up costing you more money if you prematurely convert to an S corp.
All right, and then real quick, Carrie Cochran asked if you could share your email address for Sheffield services. Let me see.
Sure. So it is my first initial, L, my last name Sheffield. So L Sheffield at SheffieldAFservices.com.
All right, copy. All right, so then let me put a little sign here, answered. Okay. Essence Brit, I love your name by the way. She asked, should we work with an accountant to let them know we are ready to pay ourselves and provide them with our audits, or is this something we can start doing on our own?
I would say definitely work with an accountant if you're looking to convert over, just because you want to make sure that you are converting at the right time. So there are instances where you're at that 50K in profit, but you may have some other things going on to where it may not be beneficial for you to switch over to an S corp. So I would say definitely consult with an accountant before you make that switch.
Gotcha. Perfect. Then another anonymous poster asks, is there a tax difference between paying yourself versus paying back debt, paying yourself back after funding the business?
No, there is no tax benefit. So that's basically looked at as an owner's investment, and then you're paying yourself back that investment. So the best way to look at that is a loan. If you're working with an accountant and they're doing your books, they shouldn't have the owner's investments in as anything other than a loan because you're basically investing money into your business and then you're paying yourself back. So it wouldn't be income or sales in your business that wouldn't qualify as that. So you don't want to count those payments to yourself as expenses, if that makes sense.
Gotcha. Another anonymous poster asked, is there a rule of thumb percentage guidance to pay yourself or keep in the business bank account, or when to know when you can begin to pay yourself?
Yeah, and it all varies case by case, depending on your financial situation. I don't like the whole the guidelines and percentages because that may work for someone else, but that may not work for you. So I would say just assess your personal financial situation and then your business financials, and then make that decision whether or not you should be paying yourself or that you can afford to pay yourself using the steps that I went over in the presentation.
Excellent. And then let me see. Okay. And then another anonymous poster. I hope this isn't the same person. I have a vacation account that I recently opened through my business account. Would that money be considered owner's draw, or how should I account for that? I have an LLC.
Okay, so
And
if
real
you
quick,
can,
can you
oh
explain
yeah.
what a vacation account is for the
Yeah,
rest of the group?
it's basically like a cash envelope. Different clients or different individuals may be saving up towards a goal. So they may have a vacation account, they may have a boat account or what have you. And that's basically tucking money away. Okay, that's basically tucking money away towards a certain savings goal. So with that being said, the vacation account, it will be an owner's draw just because it's technically not a business expense. It's more of a personal goal. And we don't want to have that in as an expense account because it can be audited by the IRS.
And that's a repost. All right, and that was the vacation account one. All right, Krista Rogers asks, what do you recommend as the best method to keep books? I organize receipts and take a total of profits and expenses every month, but do you have any recommendations?
Yeah, keeping track of your books, I would definitely say use a bookkeeping software like QuickBooks. You can get away with using a spreadsheet, but if your business is transaction heavy, then that will leave room for human errors. But if you have a bookkeeping software, I would definitely say utilize QuickBooks. They have a very affordable plan. I think their lowest plans start at $31 or $32 a month,
Mm-hmm.
so very affordable.
Yep.
And then what was the second part of her
The
question?
second part was she was just saying how she currently kind of keeps her books and, if what you would recommend is what she was asking.
Oh, okay.
Okay. Um, Camille Dickerson asks that what she said. That makes sense, but when applying for grants, they often ask how many employees my business has. Does my LLC have 0 employees?
Yeah, so with the grants, each grant that you apply for may vary. I applied for two this year. One grant wanted me, and I'm an LLC at the moment. One grant wanted me to count myself as an employee. The other grant did not. So it all depends on what a grant you're applying for and what their stipulations are. But they usually will let you know if you should count yourself as an employee or not.
Yep, okay. And then Anonymous asked, I've been in business for a few years, but had more expenses than income until last year. I don't have the resources to pay myself on a regular basis. I pay myself as the funds come in, and some are small payments to the company, so I don't draw at all. So I guess the question is that a good way of going about things, or should they look at a different method?
Yeah, yeah. So if you don't have the income to pay yourself and you're a sole proprietor or an S corp, then yeah, that's perfectly fine for you not to pay yourself. Um, I would just be very aware that if you're filing your taxes on a consistent basis, after about 3 or 4 years, if the business is not showing a profit on your taxes, the IRS may look at that business as more of a hobby and they will send you a letter saying that, hey, you can no longer count this as a business. You're not having profit year over year. So just be very aware of that. So if you showed profit last year, and I think that's what the question stated, just make sure you continue to show profit going forward because you don't want any letters from the IRS.
Gotcha. All right. I was here. Okay. If you have a partnership and right now you're 50-50, can you change this agreement later on, meaning changing it to 40-60? If so, Does there need to be a change on how you did an owner's draw slash payment in the past?
No, there's no need to change your past records, accounting wise. But if you're going to change it from 50/50 to another percentage, all you have to do is just draft up a new partnership agreement. And then going forward, you would track your books using that new partnership agreement percentage.
Perfect. All right. Then Jennifer asked, what kind of document should we use to properly track income and expenses? Is a general income / expense monthly Excel spreadsheet enough? I am an LLC.
Yeah, if you are a transaction heavy business, then I would say you can get away with using the Microsoft Excel spreadsheet. Now, if you are transaction heavy, where you have multiple transactions coming in and going out on a daily basis, I suggest you using an accounting software, bookkeeping software.
All right, let me see. And then Leslie Harris asks, can clients put Sheffield Accounting Services on retainer as their company grows?
Yes, yes. So with my business, I offer quarterly services for new business owners, and I also offer monthly services for existing business owners. So I have a variety of plans. You can also have me come in and help you out through my accountant on demand service, and that's basically an as needed service. So if you look at my website, all of those service breakdowns will be listed.
All right, and then where am I at? I'm at Yolanda. Yolanda Adams asks, how do you decide if you want to be an S Corp versus an LLC?
Yes, so once you get to that magic, that golden number 50K, I would suggest if you don't have an accountant, get with an accountant to help you make that assessment on whether or not you need to go ahead and convert.
Gotcha. And then Essence Britt asked another question. I'm going to modify your question a little bit, Essence. She asked specifically if you work with businesses registered in New York, but what is your service range? What businesses
Oh
can you
yeah.
work with?
Yeah. So my specialty is working with small business owners who need financial foundation put in place. So I have clients in all 50 states. Ranging from I have California clients, Washington State. I actually just signed my first New York client about 2 months ago. But yes, I can work with clients in all 50 states.
So it sounds like as long as they're under the IRS,
Yes.
then you can work with them,
Yes,
right?
sure
So
can.
if you cross the border into Canada, maybe not. All
Yeah,
right,
maybe
so
not, maybe not.
all right, so again, I'm gonna try to catch up here. So I'm gonna ask you a question. What are like the top three, mistakes that you see from your clients, that you would advise kind of our group to try their best to avoid?
Yeah, I would say the first mistake is what I mentioned earlier with the client who is an LLC paying himself as a salary employee. That's the number one mistake. Um, Well, I would say actually the number one mistake would be not having bookkeeping. I'll start there.
Mm,
Not having any type of bookkeeping in place, no spreadsheet, no accounting software. That will lead you in a world of trouble because you will more than likely end up not taking advantage of all of your tax deductions because if you're not tracking your income and expenses, how do you know if your business is performing or how well do you know your business is performing? So if you have that in place, you'll open doors for grants, loans, just knowing how your business is performing month over month. And then number two would be making sure if you're paying yourself, making sure you're paying yourself either an owner's draw if you're a LLC or a S corp, LLC or excuse me, sole proprietor, a salary and distributions if you're an S corp, just making sure you're paying yourself properly. Um, and then the third mistake, I would say not working with an accountant if you aren't good with numbers. Some business owners can get away with not working with an accountant because they're good with numbers naturally. But if you're somebody who feels like you're lost when it comes to your business finances and taxes, definitely get with a bookkeeper or an accountant as soon as possible. And if you feel
Gotcha.
like you can't afford it, we can run an assessment with my business and we can determine if we can set you up for quarterly services instead of the monthly services.
All right, I'm going to circle back to a question from Carrie Cochran because I needed a bit more details to properly answer it. So her question was, do you advise a CPA or QuickBooks for a business filed as a C Corp?
I would recommend a CPA. And I'm a QuickBooks Pro advisor, but I know the QuickBooks reps that you may speak with, from what I'm hearing, they're not as personable because they're dealing with 50 million other small businesses. If you get with the CPA, they're more personable. They'll hopefully be willing to sit down with you and discuss your goals and the things that you have going on with your business. You won't get that same personal touch if you're going through someone from QuickBooks.
All
And
right.
I'm a QuickBooks advocate, but just throwing that out there. Get with someone that you can, sit down and have a Zoom meeting with monthly or quarterly or what have you.
And then to that same question, because like you said, S corps have become very popular. What about for like a S corporation? Would you CPA or QuickBooks? What would be your advice?
I would say the same thing. Definitely get with the CPA or an accountant. Once you hit the S corp mark, I would definitely say get with at least an accountant. A lot of individuals go to bookkeepers, and not to say that bookkeepers aren't skilled, but they are not as good when it comes to helping you navigate the S corp world. Some may be, but most are not. So definitely at least get with an accountant once you hit the S corp mark.
And then to follow up on that question,
Mhm.
what's the difference between a bookkeeper, accountant, and a CPA?
Okay, so there's a huge difference. So with the bookkeeper, their main task is separating your income and expenses and placing them into the proper categories. So tracking your income and expenses typically is what a bookkeeper does. The accounting portion is more analytical. They take that bookkeeping information and make sense of it and help guide you to the direction that you want to go. And then the next step up will be either a CPA or a CFO. And that is what they're good if your business is growing exponentially and you need help getting to the next levels of your business. So I would say starters, everyone needs a bookkeeper at least. And as your business grow, I say find an accountant. And then if your business grows some more, then get with a CFO or CPA, and definitely interview the CPA because not all of them, they're like doctors. You have an ear doctor, eye doctor.
Mhm.
Same with CPAs. They have different specialties. So just interview them before you just sign anything on the dotted line.
All right. And then real quick, could you share your screen again and post back up that last slide?
Oh yeah.
So I definitely want to give people the opportunity if they wanted to scan that QR code or visit your website, to have that opportunity to do that.
Okay.
All right. I just about cleared the queue, y'all. Y'all been bombarding me with questions. So, Gloria, so I'll let her do that, and I will go back up to the first question. And I've seen some questions were posted in the chat. I will hop into the chat and try to grab those questions. All right, so let me go back up. Okay, so Toya Wallace asks, what if you travel to London for your business? Can I count that airline tickets, Uber baggage classes, etc. as a business expense?
For sure. If it's directly related to your business, then it's a direct business expense, which can be written off on your taxes.
All right, and then Jazzy Buchanan asked, how do you feel about giving my S Corp ownership of my personal stock that pays out dividends and I purchased at a discount through my employee share program previously?
That is a loaded question, and it all depends on, and I hate to be that person to say it depends, but a lot of cases in business accounting, it depends on your situation as a whole. If you want to contact me, give me a call or schedule an appointment, we can definitely discuss it further. I just need, more information to give you guidance on that.
Cool. Let's see, and then we'll go down here. That was Jazzy. Okay, answered that one. Okay, Ashley. Ashley asked, should we be concerned about receiving that letter from the IRS stating that the business is a hobby? Why or why not?
You will typically only receive that letter if you're operating years and years and years reflecting a loss. Now, if you're only showing a loss for 1, 2, or maybe even 3 years, you don't have to worry about it. What individuals and small business owners are doing, they're trying to get away from paying taxes. So they just have an LLC reporting a loss so that they don't have to pay taxes. And that's what the IRS is aware of. So they're just trying to mitigate that for the most part. But if your business isn't operating at a loss and you aren't showing it on your tax return for more than 3 or 4 years, you'll be good.
And that's a bit of a punch in the gut, getting a letter from the IRS like, yeah, this is a hobby.
Yeah,
This ain't
yeah.
no
It's
real
not a real
business.
business.
Yeah, like shade. Okay, anyways. Um, and that was Ashley. All right, Carrie Cochran asked, can I write my own payment/employment contracts, or should they be drafted by a lawyer?
I would say get with an attorney just because you want to ensure that those contracts are airtight. And what I also recommend, depending on where you are, get with your local college, the law department at your local college. A lot of those students
Hmm.
are looking for experience and they may offer to write up your contracts for free. I'm in Cincinnati, Ohio, and the UC Law School, they wrote up about 4 contracts for me. One was a NDA, a non-compete, an employer contract, and an independent contractor contract, and it was all free.
But listen, ain't nothing better than free. And that's a
Oh,
great point. Because of course we're in Cincinnati, Columbus, Portsmouth, and Cleveland. Like she said, University of Cincinnati Law School, they have their law clinics. I think they may do them like once a quarter, where you can get
mhm.
free legal advice, and then you can get those resources like
Yeah.
Laurkita said. And
Mhm.
then, like she said, you can just approach, some law students or because they're always working with businesses, like she said, they're trying to get that experience. I know the law school at Ohio State does the same thing. I forget which college the law school is at in Cleveland, but they do it as well. And then Shawnee State University, the big university over by Portsmouth, Ohio, likely if they have a law program, they likely have those legal clinics as well. So you want to search like free legal clinic near me or university legal clinic near me, and then you can get some resources or contact that university directly and see if they offer those services. But that is definitely great advice. Let's see here. Okay, so contracts. Okay, here we go. What stip Anonymous asked is what stipulates when you pay quarterly taxes versus yearly taxes?
So that could be if you're talking about income taxes. Usually, if you owe over $1,000, then it's recommended that you pay quarterly taxes, and whatever you pay quarterly will be deducted from your final annual bill. Um, and if you're speaking of payroll taxes, typically payroll taxes are quarterly unless you don't have very many employees who don't work very many hours, then the IRS will allow you to pay your quarterly payroll, I mean, your yearly payroll taxes.
Perfect. And just a FYI, I did shut off the Q&A. We've got quite a few questions in the queue that I still need to get to. And then I also wanted to get to some of the questions in the chat before we hit our 1:30 time frame. So if you are trying to post in there, I did shut it off. So I do apologize about that. But you have Sheffield Financial Services information right there. So you can always contact Laquita directly and get those questions answered. All right, so the next question we have, What should you look for in an accountant, CPA, or the other one you mentioned? Um,
A
not all.
bookkeeper or CPA, yeah. Yeah,
Not
I would
yeah.
say just making sure you're comfortable with that individual. If you're anything like me, when I meet with a client and I get a few laughs, I'm like, okay, we can make this work. But if I don't laugh at all, I'm like, this is not a good vibe. This may not work. But one, making sure there that you get along with your accountant, that you like your accountant, or your prospective accountant if you're interviewing, and just ask them, questions related to your business. See if they sound confident in their answer. Um, if they don't sound confident, you may want to keep interviewing individuals, or they may even say, I don't know that answer, but I'm gonna get back to you. There's nothing wrong with that whatsoever. They're being transparent and letting you know they may not completely have all the answers because we don't know everything. Um, and then I would say the third one would be if they're letting you in on what they're doing. That's super important. You don't want to be in a situation like Steve Harvey to where he was letting his accountant handle everything and he was completely in the dark and end up owing all that money for taxes. You want
Yeah.
someone to let you in on what they're doing, to explain what they're doing. So all of those three things are key.
Excellent, excellent. Let me see. And Jennifer Zell, I seen your question about if this session will be offered again. Um, we do these types of sessions every Tuesday, except for major holidays and things like that. But if you want this specific session, I would definitely reach out to Laurkita and see if she can come and speak to your group of consultants that you're talking about. And that way you can get some more specific answers as it relates to both your consultancy as well as your clients or your clients within that consultancy. So, all right, next question was I have a single member LLC and get paid directly through client 1099 contractors. I have been paying myself through owner's draw. Should I separate the 1099 income from my business or is that fine?
If okay, so and you kind of faded out at the beginning. She has an
Sorry.
LLC and she acts as an independent contractor.
Yes.
Okay, so if it's under the same industry or same type of business, I say it's perfectly fine to keep it under one umbrella. But if the independent contractor situation is completely different, a different industry from the LLC, then I would say definitely separate the two.
All right. Here we go. And then Gloria asked, when do you know if you need a bookkeeper, accountant, or both?
Great question. I would say starting out, everyone needs a bookkeeper, or if you're familiar with bookkeeping, then definitely have that in place yourself. Once you hit, I would say about close to 100K in revenue, then you may want to explore the accounting function, hiring or outsourcing an accountant or hiring an office accountant. And once you hit about 250K in revenue, then I would say explore the CFO option.
All right, perfect. Rolling back down here. All right, so Jennifer Zale asks, okay, was be off again? We already answered that. So it looks like I may have skipped Gloria's question. Sorry about that. Then Anonymous asked, I have a single member LLC. Okay, thought it was the same question for a second. I have a single member LLC and get paid directly through clients. That is the same question. So we answered that one. Bookkeeper account. All right, here we go. Anonymous asks, two of my kids, 15 years old and 12 years old, that work at our business occasionally. I've been told their wages are not taxed, but still expensed through the business. Is this accurate? And if so, how should they be recorded on the books?
Yeah, so that is somewhat accurate. Their wages are recorded on the books, and they don't have to pay the Medicare and Social Security tax.
Okay.
Um, and then to go even further, if their wages are less than the standard deduction, which is, I want to say 14K this year, then they don't need to file taxes. But if they're over that amount, then file taxes. But yes, that the information you were given is correct, partially correct. So they still would be responsible for other taxes, like the federal income taxes will be taken out of their check, along with state and local.
And I have a follow-up question to that. So, what age does that start at? Because I got a 5 and 8-year-old, and they need to start paying some bills. How does that?
I would say they can work for the business. Just make sure that it is an age appropriate job.
Mm.
I had a situation where an 8-year-old was supposedly doing social media, and I'm like, that's not going to fly with the IRS. So just make sure it's age appropriate and their pay, is applicable to their age.
All right, perfect. All right, then Ingrid Pel Vargas asked, I have a bookkeeper that does everything for me. I've been in business for 12 years and have made profit every year. Do you recommend moving up to a S corp if I'm the only employee? I contract most of my work. I contract the work that I need help with 2 or 3 times a year, but for the most part, I do the projects myself.
Yeah, I would say if you are at or above that 50K mark in profit, then yes, you should explore the S corp. If you're paying a ton of money in taxes, and it all depends too, if you have other income sources or if you have a spouse and or dependents, all of that is factored in. But if you are at or above 50K in profit, I would say it's worth at least exploring. So sitting down with um an accountant who can help you make that assessment or make that judgment on whether that will be the best move for you. And it may not be the best move for you depending on everything else that you have going
Excellent.
on.
All right, so that was the last of the questions from the Q&A. Perusing through the chat.
Okay.
Um, okay, the first question that came up. Okay, that was a question about a question that I can't get back to. Yeah, I've been busy in this chat. Let me see. Mm-mm-mm-mm-mm-mm-mm-mm. Also, I did see some questions about getting Laquita's email that will go out in the follow-up email. So you will get that in the follow-up email along with the presentation and the recording of the presentation. So just be looking out for that between today and tomorrow. Uh, man, like I've been scrolling this whole time and I'm still getting through the, is it A, B, or C, right? Right now. Those who posted your question in the chat, I'm going to get to as many of them as I can. Just give me a second. Wow. Okay. Also, it's the big thing, if you enjoyed what you heard today, if you thought, Sheffield Accounting and Financial Services was helpful, schedule a call. Scan the link, schedule a call, even if you're just trying to get some more information, follow up. Like as you all know, you typically only get a little bit of time with a financial advisor, accountant, CPA, and oftentimes you don't get as many questions as this answered. So if you found it helpful and useful and you're looking for that advising or are looking for new accounting or financial services, definitely schedule a time to meet with Laurkita. She actually has a few clients that are in the chat. And they told me personally, it is like, oh yeah, she's giving the training. I'm going to be there.
Oh,
So
wow.
yeah, so that's how helpful she is. They work with her all the time and they still wanted to see, what new nuggets they can get from this presentation. All right, so I think I'm here. All right, so I think this was referring to let me wait. So I think this was referring to using like a payroll company or QuickBooks or something like that. Rachel Crowder asks, is this the best approach if you have a seasonal based business?
It all depends on how many transactions you have coming in during that time frame. So if it is transaction heavy, I would say definitely go for it. Now with QuickBooks, if you're seasonal, what I would do is pick the plan that works for you during those peak months, and then you can always downgrade your services. You're not locked into a certain subscription model with QuickBooks. Um, or if you want, you can get your books together for those peak months and then end your services. And then, of course, pull all of your financial documents from QuickBooks and keep an Excel spreadsheet during the off season. That's another option for you.
Perfect. And then oh, don't do that to me. My webinar chat just reset and took me to the bottom. Okay, okay, okay. Thank you. Great questions. This is my business. Ah, it didn't reset on me. Mm, 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 mm. This part is going to look great on the recording. It's going to be super fun to sit for. Okay, so Kendra McElroy asks, do you recommend combining multiple businesses into a S Corp or C Corp when you have a few businesses that meet that 50K mark altogether?
Yeah, I mean, not combining them, of course, but setting up multiple business as an S corp is a great option, especially if you are a high net worth owner. Then I would say definitely make that switch. It could save you tens of thousands, and I've seen hundreds of thousands in taxes saved.
Wow.
Mhm.
Impressive. Shalane Hutchins, she said Cleveland State University has a law school. So you might, if you're looking for those law services and you're in that Northern Ohio, Cleveland area, you can contact Cleveland State University.
Oh, nice.
Information. Okay, so we answered that one. That was amazing. Libraries, helpful. All right, I think we got through all of them. All right, so that is it. I think I need to take a breather. But no, excellent session. Laurkita, I really appreciate you coming on and providing, this training for, these Ohio businesses. We're coming in from all parts of Ohio. Do you have any final words for the group? Anything new going on with Sheffield Financial Services?
Yeah, I would say first, thank you for joining me this afternoon. I know some of you are on your lunch break, and thank you for spending it with me. But I would say if you would like, you can always schedule free discovery calls with me just to get more information about my business and how we could possibly work together. And if you would like to schedule a pick my brain session, if you have case specific questions, what I'll do is shoot me an email and then I'll waive that $100 fee for the first 10 individuals.
There you go. First 10, you heard it. So as soon as you get that email from me, or you could just go to her website if you was paying attention.
In fact, Isa, I'll send you a code that
Okay.
you can, yeah, just include that in the email and we could go from there.